Hey guys, and welcome to today's training video. Today we're going to be looking at market behavior and structural secrets. Market behavior and structural secrets. So you agree with me that the markets won't be in a range all the time, in an uptrend all the time, or neither will it be in a downtrend or constantly have a low volatility or high volatility. The market tends to change all the time. The market condition or structure tend to change and improve all the time. Good. So that's why no Forex strategy or particular strategy works all the time. Why? Because the market is constantly changing. You understand? As you know, the popular quotes, change is a constant thing. So the Forex market obeys that principle. It changes, it improves itself over time. So it's not in a particular kind of trend all the time. So now I'm going to be showing you 4 stages in the Forex market that will help you better time your entry and your exits in the Forex market. Now, whether we like it or not, the Forex market tends to be in one of these stages all the time. So if it's not in this stage, it could be in this stage, it could be in this other stage. So, and when you understand the kind of stage you are currently, it helps you better time your entry and your exit, better know which trading strategy to apply so that you don't lose out in the Forex market. So with all this said and done, if you are new to this channel, make sure you hit the subscribe button, like our video, turn notification post on so you don't miss any of our videos ever again here on this channel. So if that is done, let's get started. The accumulation stage. The accumulation stage is a stage that forms after the declining stage, which is a downtrend. So the accumulation stage is usually a range. So I'll just give you an illustration here. Usually we have something like this going down. Next time we're having a spike up, a spike down, spike up, a spike down. This region over here, sorry, let me draw that very well. This region over here is known as the accumulation stage. This one over here, this one that tends to be in a range, is known as the accumulation stage. And as you can see, it came about after a downtrend had hit this support over here. This support over here. So this range came about when the downtrend hit this support over here. So this is an accumulation stage. So now let's go to the Forex chart and see how this works in the Forex chart. So this is the GBP USD in the 4-hour time frame. The GBP USD in the 4-hour time frame. And let's say, okay, we just zoom out of the chart to see what is going on in the market, and which we've done already. So we just move. If you look at this region over here, you agree with me that this is a downtrend. The market is going downwards right here. So this is a downtrend. So now, if I pull out our lines, support and resistance lines, and draw these lines over here and drag this chart like this, you agree with me that this region over here is in a range, and this range is known as an accumulation stage. Mind you, remember what I said this is a stage that forms after the declining stage, the downtrend. Are you understanding what I'm trying to say here? So now you can see here now that after a downtrend was being formed over this region here, we experience what we know as the accumulation stage. So you agree with me that not all strategy will work in this market, in this particular stage of the market, because trend following system will not work here. I want to say, because this is not a trending market, this is a range market. There are other strategies that won't work here. What you'll be looking to do in this kind of market, you'll be looking to buy at the lows and sell at the highs. You'll be looking to buy at the breakout out of this stage. I know what I'm saying. So these are strategies that you'll be looking to apply in this market. I can understand what I'm trying to say. So this is the benefit of identifying the stage of the market which you are currently at in the Forex market. I know what I'm trying to say. So with this said and done, let's get back to class. After the accumulation stage, we have what is known as the advancing stage. This is a stage that forms after the accumulation stage. This stage forms after the accumulation stage. Mind you, accumulation stage is a stage that is a range. You understand? So after the accumulation stage, this market cannot stay in a range all the time. It wants to advance. It wants to move forward. You understand? And that bets the advancing stage. So I'll give you an illustration here and take you to the Forex chart and we'll see what's going on there. So now, this is the accumulation stage. Accumulation stage, accumulation stage. Good. So now, this is the accumulation stage. The market won't stay in this stage all the time. When I say it can't stay in this stage forever. The market tends to do something like this, form a little distance and break up higher. This is what the markets will do. This market that went up higher is known as the advancing stage. So now, you agree with me that over this region, the markets didn't remain in accumulation stage forever. That's the accumulation stage is this stage. This is the accumulation stage. So the market didn't remain at this stage forever. It broke up higher. And this breaking up higher formed a new stage known as the advancing stage, an uptrend in the market. So let's go to the Forex chart and see how this works in real terms. So now, steady GBP USD 4-hour time frame. Good. So now, you see over here, this is the accumulation stage after the declining stage. And over this region, we start experiencing a breakout of this resistance over here, trying to convert it to a support, but it didn't work out. It reversed back and it broke out again. If you move forward like this, you find that the market broke up higher over this region. This region over here now is now known as an advancing stage. So the same strategy you applied in the accumulation stage is not the strategy that will work now in the advancing stage. You need to change your strategy. You can no longer buy at the highs. Sorry, you can no longer sell at the highs and buy at the lows any longer. You'll be looking to apply like the trend following strategy. You'll be looking to trade pullbacks in this advancing stage over here. So this is now the new advancing stage over here. I get what I'm trying to say. This is a new advancing stage over here. So now this is how the thing works. And with this understanding, you won't be applying wrong strategies in a wrong market or a wrong market stage. I get what I'm trying to say. So now let's get back to class and see the other stages that we have. So after the advancing stage, the markets won't stay in this advancing stage forever. It will land in what is known as the distribution stage. The distribution stage is a stage that forms after the advancing stage. It's a stage that forms afterwards the advancing stage. So the market broke out to the accumulation stage and had something like this and went up higher. Right, you see. When it got here, it hits an opposing pressure and started forming highs and lows. Highs and lows. What looks like now a range. So now, drawing our support and resistance lines, this is what we have. So now, after this uptrend over here, this is an uptrend. After this uptrend over here, we now have what is known as the distribution stage. Are you seeing how this works now? So now, you can be applying the strategy you applied in the advancing stage in the distribution stage because it won't work. It won't work. It won't work. Are you trying to say now? So now you'll be looking down to change your strategy. So let's see how this works in the real Forex chart. So now, coming back over here. Coming back over here at this region. Coming back over here at this region. After this uptrend over here, this advancing stage. After this uptrend over here, this advancing stage, we notice that the markets formed somewhat like a range here. Let's draw our lines. So this is known as the distribution stage. Are you seeing how this thing works now? Because now the market has finished an uptrend. An advancing stage has come to an end. Are you going to say? So now the strategy, our bias will change. We have to shift from trading the advancing stage to now trading the distribution stage. Are you trying to say? So you see, the market is not at this kind of particular stage all the time. That's all the message I'm trying to get across to you. So you don't make mistakes in the Forex market. So now in this stage, now what you'll be expecting to you, the strategy you'll be applying, you'll be looking to buy the lows and sell the highs of this market. You'll be looking to sell this. Let me get this stuff out. You'll be looking to sell this highs and buy the lows of what? So have you seen it now? With this, you don't make or you don't take wrong trading decision in the forex market. But the thing is that the markets can be in this region all the time also. And that brings us to the last but not the least, the declining stage. This is a stage that forms after the distribution stage. The stage, the market is moving chop, 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 chop. Good. So now we draw our line and we draw our line. Good. So now this is known as the distribution stage. But you agree with me that the market will be in this distribution stage all the time. You start seeing something like this. Market will either go up higher, come back lower, reverse, reverse, then break down lower. You agree with me? Good. So now forming a new downtrend. And this downtrend is known as a declining stage. It's known as a declining stage. So now let's see how this applies to in the real forex chart. So now, this is a distribution stage. After this distribution stage, if you move forward like this on the chart, you find that the market went in a downtrend. This downtrend is known as the declining stage. So you see, the market did not remain at a particular stage forever. It didn't say, oh, I've gotten to the distribution stage. We ain't moving any longer. No. The market loves change. The market wants to change. The market wants to improve itself. So you as a trader, you have to improve yourself. So now the market has left the distribution stage and is now in a declining stage. So what should happen now? Your trading strategy, your bias towards the market should change also. So now you'll be looking now to trade pullbacks. Use a trend following system in this declining stage now. Because if you apply buying the lows and selling the highs, you lose out in this market. So what you can do in this market is either you trade breakout or pullbacks. You trade breakout or pullbacks in this new declining stage. So this is how the markets tend to move in cycles. And these cycles are classified into 4 stages. So with this all said and done, we've come to the end of today's lesson. Our summary for today is, by now I hope you agree with me that the market does not head towards one direction forever. I know you agree with me because we've proven it with the various markets. Mind you, you can try this with other markets. You can try it with the Swiss franc JPY. You can try it with the Euro USD. You can try it with other indices and stock market. You can try it out. And you find that the market does not stay in one region all the time because the market loves change. Don't forget that. And if the market loves change, you also as a trader, you need to change. You need to constantly improve yourself to be able to profit in various stages of the market. So going through the summary, the accumulation stage is a stage that follows after a declining stage. Don't forget that. The accumulation stage follows after a declining stage. The accumulation stage is somewhat a range and the declining stage is somewhat a downtrend. The advancing stage is a stage that proceeds after an accumulation stage. Accumulation stage is in a range, and after that range, you agree with me to stay there forever. The market will tend to advance upward. Good. So now, the next one is the distribution stage. This is a stage that proceeds after the advancing stage. So after the market has advanced in somewhat like an uptrend, it won't stay in that uptrend forever. It will hit an opposing pressure and form what we know as the distribution stage. And the market won't stay in the distribution stage forever also. It will have to leave that distribution stage. Either it continues higher to an advancing stage or it forms what we know now as the declining stage. So the declining stage is a stage that proceeds after the distribution stage. Mind you, it's not compulsory the market must move from an advancing stage to accumulation to distribution to advancing to declining. No, it can move from advancing to accumulation and return back to advancing. I want to say, I don't know if you get me. So I'll just give you a brief example so you don't miss out. So you don't be like, wow, he told me, oh, the market will move like this in 4 circles, and you have that kind of mindset only like that. So let me just show you a brief example before we wrap up today's video. So now, you see now, you agree with me that the market is at this region here in a known as a distribution stage, and it went in a declining stage, declining stage, declining stage, declining stage. And when it got to this declining stage, it created something here that we can tag as something here we can tag as an accumulation stage. So after this declining stage over here, the market formed what we know now here as the accumulation stage. But now, after the accumulation stage, as we said based on our teachings, after the accumulation stage, we're expecting what? An advancing stage. If you look here, the market did not do that. The market broke down lower. I say broke down lower, forming another accumulation stage. So it's not compulsory it must move from an accumulation stage to an advancing stage to a distribution stage to a declining stage. No, it can move from an advancing stage, to a distribution stage to a more advancing stage. Then maybe hits a distribution stage before forming a declining stage. So you must have it. All I want you to do is just be able to identify these various stages so that your edges can play out in the forex market, so that you can be a profitable trader in the forex market, so that you can be well grounded. You know what kind of trading strategy to apply in any given stage of the market. So I hope you understand all we have shared here in today's lesson. So with all this said and done, thank you for watching today's video. See you in the next video.